Everyone is panicking over this market drop. Headlines screaming recession. Tariff war is raging on. In 2008, I saw my dad lose absolutely everything in the market crash. And in 2020, I saw the same exact thing happen to so many people while I built. And in 2025, I am doing the same thing over again. Today, I'm showing you the top plays that you want to be paying attention to in this massive recession that we're going into. So every single one of you that is viewing this right now can get a copy of my recession playbook completely for free. Shows you all the setups to be paying attention to, ETFs, stocks, all things that you want to be watching out for to take advantage of this amazing opportunity that we are being handed on a silver platter. All you have to do is be subscribed to the channel, hit like, and drop a comment. I will personally respond to you with the recession playbook for you guys. But we have seen the headlines, right? We had a hell of a week last week, massive correction, and a lot of red, right? We could see on the fear and greed index, we are at a 4. We haven't seen these kind of levels since COVID times. Today, I posted on my X. If you don't follow at @OnlyPeterPro on X, go follow me there. I post kind of like daily stuff, ideas and things like that. I thought this morning we were going to hit at least a level 1 circuit breaker, but that did not happen, right? We actually are seeing a little bit of green today, and I'm going to go into some of the setups and how to play this because we saw a huge opportunity. But I think the icing on the cake was when Jim Cramer said that he thought this was going to be a Black Monday round 2, and I think that totally threw that thing off. Right, the inverse Kramer strikes again. So what are we looking at? SPY right now still below our $500 mark. I did mention that I thought that this was yesterday's video, that I did believe that Monday we were going to see a big drop down on SPY on Monday under 500, which we have seen here, right? Down 2.5% today. You could see, gosh, I don't know why, guys, but I just love watching this. I can't log on to social media. I'm sure you as well. Like, people are just so scared right now, running everybody. Everybody's blaming Trump. Everybody's blaming everybody when it's like, dude, this is the time to make life-changing amounts of money for yourself. This is the time to be loading up on ammunition. Like, what are you doing? Like, you don't buy at all-time highs and continue to buy. Like, these are the times that you can make huge gains. Literally, SPY has just given back everything over the past year. You can see at its low point last year, it was 495. We were trading at the same exact levels, right? If you don't know what you're doing, you're trading or whatever, you don't know, you're just like a truly passive investor, you don't want to do cover calls, cash secured puts, and credit spreads and fun things like that. I'll be talking about that in just a minute, so watch the rest of the video. But just SPY and chill. Usually, SPY has always hit all-time highs, and you could see, look how far off we are from our 200 and 300 day moving averages. Absolutely crazy, guys. Just it's a sight to see, and I absolutely love it. Same thing with QQQ and SPY. You can't go wrong buying and holding QQQ and SPY. Like, you just can't, okay? All the smart people right now are loading up. The only people complaining right now are honestly like the people that like buy like one share of QQQ and they're like freaking out because $500 is a lot of money to them. Now, that's not to discredit. $500 is a lot of money. I'm not going to say I wouldn't pick it up if I walk by $500, but at the same time, you need to figure out a way to deploy as much capital as comfortable for your risk tolerance, because these are the times that you can accumulate a lot of wealth, right? Because if you believe in this country, you believe that we're going to hit all-time highs again, you will do whatever you have to do, right? But the problem is the people that are already rich and that already have a lot of money, like the money that they're just buying a bunch of stocks right now, they don't need it, right? They don't need it to survive. But unfortunately, a lot of people, like retail investors, all the people Robinhood has pretty much brought into the mix, right? That made investing so easy. Like, for them to dump $1,000, $2,000, $3,000, that's a huge amount of money for them to dump in. I've been saying it. Card delinquencies are at an all-time high. Credit card payments are at an all-time high. Dude, this market, I believe, like I've been saying since I started the channel, I'm scared, right? When I started this channel, our fear and greed index was in the extreme greed area, and that was only 2 months ago since I started this channel. And I was like, dude, look at credit card debt payments. Look at the card delinquencies. Like, it's not good, right? Like, it's not good. So the people that stand to lose here, right? Yeah, I would be pissed too if I like didn't have any money whatsoever, right? But like the people that already have money and they're sitting on 50, 100, 7 figures that they can just deploy right now, they don't need that money to survive. man, they're going to be raking in. They're going to be raking in a ton of money. And if you have a big portfolio, just stay with me because I'm going to show you guys a couple strategies here. So take a look at SPY, take a look at QQQ. You can also go take a look at the actual options chain if you wanted to buy SPY. Like if you have 50 grand to invest right now and you really just want to be more of a passive person, I would strongly take a look and do your own research on SPY. Look at just the weeklies. Like if you just go out to April 11th with sell put, and if you don't know what selling a cash secured put means, it basically means you're comfortable buying 100 shares at a price you pick plus collecting some juicy premium for that. So what we're seeing right here is if we go down, going down, this chain is massive. If we keep going down, go, 497 right here is our share price. So right here, we could say, man, look at these premiums, guys. Look at these premiums. This is absolutely crazy. Sorry, let me just mute my phone here. I'm getting blown up all day today. We can, let's say on the April 11th, 4 days from now, you'd want to buy, look at, oh my gosh, dude, this is crazy. Look, I'm just trying to make $1,000. If you want to make $1,000 right now, 481. Let's say you want to buy SPY at 481, currently trading at 498, right? You can collect $1,000 as a cash secured put right here. Now, obviously, you're going to need, or 481, you're going to need $48,100 to pull off that cash secured put. But that is a great return. Let's go take a look real quick. What are we going to get? 1,004 or something like that. And then what are we putting up? 48,100. Right? You're getting a 2% return on SPY in 4 days. Whew, that's crazy. That is crazy. That's how you buy stocks the right way, by the way. So whether that happens or not, right, you just collected $1,000 upfront into your brokerage account. This is called a cash secured put, right? If you want to learn more about that, first link in the description. If you have no idea what cash secured puts are, covered calls, and how to collect income from your shares or from your collateral, from your money. This is the best strategy because either way, we're collecting this premium. Whether we have to buy the shares or not, we're still making that money, right? And you could do the same exact thing for QQQ. SPY's cool because you could basically run this thing every single day, right? Like you could do it for tomorrow, expiring April 8th. And look at these premiums are still insane for basically one DTE stuff. So again, watch SPY, watch QQQ. If you have the money, take a look at those cash secured puts. Both are trading well below their bottom Bollinger Band, which is a fantastic place to be looking at your cash secured puts and tremendously below its 2 and 300-day moving averages. Cannot complain about that whatsoever. Let's go take a look at NVIDIA, one of our favorites here on the channel to be trading. Seeing some green. We actually had a nice run up here just before I started shooting the video. We actually shot up close to, we were like at, just at 100. I actually talked in our private group about this. Like, hey, I know a lot of people got assigned at like 100-ish. So this was a good time to sell your covered calls at like 105, 110s. Let's go take a look because I know a lot of you probably did get assigned NVIDIA. So go take a look at your covered calls, right? We're still trading. So when you ask me this, right? It's like, Pete, you're like, hey, shouldn't we wait till it's at the top Bollinger Band? Yes, it depends on your strategy. I do recommend holding NVIDIA. But you have to go make your own decisions for yourself. I am long-term on NVIDIA, but if you really just want to get your money back and collect premium, you can still do covered calls even when we're trading below the bottom Bollinger Band. Of course, it's a better setup to go do more cash secured puts and collect that premium. But if you absolutely must do your covered calls, go look at some of the weeklies, right? Even the weeklies aren't looking bad, right? Even if, let's say, you got assigned at 95, right? You could get $260 on the hundreds that expire in 4 days. If you want to go out further, 32 days out, you're going to collect even more. If let's say you do 105s, you'll collect $410. Or if you got assigned at 105, look at the 110s. You'll collect $268 plus an amazing appreciation sale on your shares. Again, that's the covered call side, and the cash secured put side. Again, first link in the description if you have no idea what I'm talking about. I'm kind of just going through this, assuming you kind of understand the basic strategy. But with that said, NVIDIA, even though it's a little green here today, it was a little bit green. It was up like 2-3% before I started this video when I was researching it. That it's still in great territory for cash secured puts, even though it's a little bit green today, because we are below that bottom Bollinger Band. So if we did a sell put here 32 days out, and let's say you looked at the 85s, right? So you collect $485 to see what a return would look like on that. That's gonna be juicy. That's gonna be very, very juicy. $8,500, 5.71% return. If you got the money, this is the time, guys. This is when you could capitalize. This is when to deploy it, right? Like, it's not a difficult thing. Extreme fear is when you're hard deploying your capital and collecting ammunition for when everybody's in extreme greed, and that's when you're running your covered calls heavy and collecting your appreciation sales. Can't stress it enough. Moving on to Google, again, a fantastic setup here on Google as well, trading well below bottom Bollinger Band and well below 200 and 300-day moving averages. NVIDIA and Google, for me, are my top choices right now for cash secured puts. Couple others worth considering. Look at SoFi, right? It's a much cheaper, right? A cheaper stock, right? But still, especially if it's a company you believe in and with the future of banking, it being below its 300-day moving average is a really, really good sign right here, guys. Really, really good sign. And you could look at some of the cash secure puts on SoFi, and this premium is crazy for SoFi. Now, obviously, there's more risk involved with like a SoFi compared to like an NVIDIA, but take a look at some of these if you just go out your 32 days here, right? Look at the 9.5s. Look at the 9s. You're almost collecting 10%, 10% on return on your collateral. That's crazy. Another one, American Airlines. You guys already know airline stocks are getting hammered right now. American Airlines is one of my favorite companies, so I'm watching that heavily. And then I do want to talk about Palantir briefly, because I know a lot of you do love to invest in Palantir. Me personally, I am not, but I am waiting. It's nice to see Palantir, like, obviously it's had a big drop off. It's all-time highs, but like I said in a future videos, it's holding way more steady than I expected. A lot more heavy, steady than I expected. I thought this thing was going to drop, so that's a good thing. That's a very good thing for Palantir to hold it, but it's in good territory for your cash secured puts. Look at like the stuff around the 200 and 300-day moving averages. If you really want to own Palantir still, you still believe in it as much as you did 3 weeks ago or a month ago, right? Look at the 57s or 46s. You can't go wrong doing your cash secured puts around 200 and 300-day moving averages. You just can't go wrong, in my opinion, all right? Now, I'm looking at also more blue chip stuff right now, okay? When we are kind of going into this recession, bear market, right? The blue chip stuff, I know it's boring, but for me, quad option strategy is everything, okay? Quad option strategy, we're collecting income from cash secured puts, we're collecting income from covered calls, we're collecting income from appreciation sales, and then we're collecting income from dividends as well when we are running our covered calls. Now, I know a lot of my videos recently have been about like NVIDIA, Google, stuff that doesn't really give a dividend, right? A lot of companies that are not they're not giving dividends, but that's a big chunk. But the problem is a lot of these companies, right, these blue chip J&J, Procter & Gamble, some of the great companies to do quad options on, they're never really on sale. They're very rarely ever on sale. So I'm looking at these heavily right now as well, because we have dropped well below the bottom Bollinger Band and well below 200 and 300-day moving averages. These are companies that stood the test of time, multiple bear markets, multiple recessions, right? These are products that are ingrained in our everyday life. I don't think I need to explain to you guys why J&J and Procter & Gamble are here to stay. I think you guys can get that. But I love these companies to run quad options on because they have a pretty good dividend. So I am looking at potentially doing cash secured puts on J&J as well as Procter & Gamble and a couple other like blue chip companies that have a really, really good dividend. Guys, don't forget, drop a comment for the recession playbook. That's going to give you a lot more details than what I talked about in today's video. Every single person that likes, and make sure to drop a comment because that's how I'm going to send it to you, and to subscribe to the channel is going to get that. Guys, I hope you enjoyed today's video. If you did, make sure to hit that like button. Remember, sell options, collect premiums, repeat. God bless you. I will see you tomorrow.